Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P, the QQQs, and every single major sector across the board was higher. The S&P and the QQQs both hitting their own new respective all-time highs. Today was a very nice day of broad market performance overall, and it was off the back of a CPI report this morning that came in hotter than last month, of course, but not hot enough to derail the Federal Reserve from possibly cutting interest rates into the next week. We also got some unemployment claims, which were higher than anticipated, which also goes to show that the balance of risk right now does stay more in the labor side of the equation, in terms of that the Fed is going to cut rates, not because inflation is under control, but rather just to kind of prevent any further damage to the labor market, which we know has been weakening slightly over the course of the past 3 to 4 months. So in today's video, guys, we got a whole bunch of stuff to go over. Many names smashing new all-time highs, many names in the green, but we also have to review some data. So number one, what we will be doing is going over the details of the CPI report. Even though it came in hotter than last month, is it that big of a problem? And how did it impact rate cut odds, not only for next week, but possibly down the road as well for the October and then December meetings as well? Thereafter, once we're done that, we will go through our major technical analysis rundown of all our major sectors, the SPY, the QQ, financials, and everything in between, see where the rotation is taking place, and see where there might be some trading opportunities as well. Thereafter, we will do the same thing across our list of big tech names right here. As you can see, although a good portion of the market was tremendously higher today, a lot of the big tech names just did not participate that much. So we'll be taking a look at a lot of these big tech names on this list and derive, are there any opportunities for some short-term swing trades or still some long-term positions in terms of adding to long-term portfolios? Towards the end of the video, we of course will do our biggest gainers and losers of the day, of which, once again, there were many names to the downside. Big red in terms of 3, 4, 5, 6% down. We'll take a look at a few of those and derive whether or not some of them have some good trading opportunities attached to them. And at the end of that, right, we'll go through the biggest gainers, of course. Open doors, 80% day today. We'll go through some of the biggest winners here and determine whether or not it's too late to chase, or how can we possibly position in some of these names that are mounting a bit of a recovery? Because although a lot of these names are pushing a lot higher today, some of them are still kind of close to their lows. So we'll be trying to ascertain whether or not it's too late to position. And at the very end of the video, I'll be running you guys through the positions in my portfolio. Just a brief little recap of what we did this week. Very good week for us in the markets, again, in terms of realized profits, but also in terms of our running trades that we have open right now. Very solid week for a lot of our call options too. So we'll be taking a look at my positions just because today is the last video of the week. While I'm traveling, sadly, I won't be doing videos on Friday or Saturdays. So Thursday is going to be the last one. Hopefully you guys had a very good week in the market so far. That being said, that's everything for today. Let's jump right into it, shall we? So the S&P up 0.83%, the Qs up 0.58%, not looking too bad at all. And all across the board, you had some phenomenal rotation. Take a look at this heat map right here. Beautiful day all across the board, except for some key tech names here and there. Of course, Oracle, Palantir, Broadcom, AMD, NVIDIA lagging a bit behind, Netflix, then you had Boeing. But other than that, guys, very nice day, right? Everything participated, most of technology, namely software, and especially some of your semiconductor equipment and materials corporations, right? LRCX having a beautiful day, and even some of the less talked about semiconductor names, well, I talk about them a lot, such as Micron was up 7%, at one point up 10% today. The banks, credit cards, and insurance players doing very well. All of financials lifting higher. Healthcare as well lifting higher today, and the bottom half of the market, consumer defensives and industrials, everything of that nature. The interest rate sensitive segments were indeed higher as well, because after today's CPI report, well, yields, the 10 and the 20 continued their march to the downside, which of course does favor those industries. In terms of the one-day relative performance, you can see that even better to where every single aspect of the market today was largely higher. The only one to the downside, sadly, was energy and technology, surprisingly, because of the lack of big tech participation. I mean, broad-based tech participation, of course, right? Well, technology didn't have the highest gains today. The market was really led by materials, cyclicals, real estate, healthcare, and financials. On the one-week relative, happy to say that every single sector in the market is now in the green in in anticipation of the rate cuts coming next week. Very strong, and there, technology is your market leader. We've had some pretty substantial technology gains over the past 1 week. We can think about Google rallying a ton after the Department of Justice case. We can also think of names like Oracle and several semiconductor names which have been rallying in a huge fashion too. Very strong. And as we move into the month of September, I mean, this 1 month is going to encompass a lot of August as well, obviously, but not too bad, right? The only sectors that are lagging a bit behind are still utilities and consumer defensives. So very nice picture across the board. But before we get into more technical analysis, let us do a quick little look into what happened with the data today in terms of CPI. So here's your headline print, guys. Month over month, 0.4 versus the 0.3 expected. That was hotter than expected. 2.9% is the yearly headline rate. That was exactly in line with consensus and hotter than last month's 2.7. And then in terms of core, also coming in line at 3.1% versus the 3.1 expected, which is similar to what we had last month. Now, a lot of the focus today was on initial jobless claims. That one's been hovering around 210,000 to 235,000. I'll remind you guys that this one is reported on a weekly basis. Usually people don't pay too much attention to it at all, except for when jobs numbers are front and center to the rate cut narrative, of course. So today people were paying attention and it coming in hotter than expected. Well, once again, bad news is good news for the markets because they're all anticipating rate cuts. And that as well did translate into the probabilities of a rate cut moving decently higher today. Not only for September, you can have a look right here. Probabilities, the big blue chart right here is today. The lighter and lighter blues are about a week ago, a day ago, etc., right? So as it gets more pale, obviously that's longer ago. So you can see that today we are higher in terms of probabilities for the September meeting cut. If you take a look at the October meeting cut, we did see a pretty big increase there today versus the day prior and 1 week prior, now standing at about 82% for another interest rate cut in the month of October. And now in terms of the month of December, people are pricing in another cut, a lot more than they were yesterday. Today, 75% odds of a cut in December as well, which is a lot higher than a day ago and a lot higher than 1 week ago, where we were only pricing in about 46%. So the non-farm payrolls and the CPI and the unemployment claims all contributing to the fact that the Fed is probably going to cut. And we know from Jerome Powell's Jackson Hole speech just a few short weeks ago that they are no longer concerned with inflation. They deem the inflation effects of tariffs to be transitory. I know the T word, but transitory in nature. A bit of a one-time effect overall as it makes its way into the economy. Now, some of the headline numbers right here, you will see that this is the graph essentially for the CPI. So we have been upticking here quite steadily since the lows of April. You know, that is synonymous with the timeline of tariffs being implemented, both on the headline number and the blue little dotted line, which is core. So we've had an uptick there. If you want to know where it came from today, well, the biggest gain came from pretty much shelter costs, which account for about 1/3 of the weighting of the index. That was a 0.4% increase on shelter. However, not so much of an increase year over year. I'll show you guys the shelter graph and you'll understand what it means. It just means that it's still the highest component of CPI. Food prices jumped 0.5%. I'll also show you on the chart why that's not too bad. Energy was up 0.7, gasoline rose 1.9, likely indicated some impacts on tariff prices. Now, this is all fun and good, right, in terms of the headline numbers, but when you really drill down and see where it's coming from, you'll see it's not that big of a deal in my opinion. Here's your all items. You can see the net uptick, as we were saying, since April, but let's break it down a little bit, shall we? So here's food from home. So food from home has been coming steadily higher since the 2024 period. Right now, we're sitting about 2.7%, which is higher than you would like to see. But there are several times when we go back over the last 20 years that food was a lot higher than this. So given the context, historically, is it that high? The answer, of course, is no, but still on an uptrend right now. If you take a look at energy prices, well, energy prices are coming off of deflationary territory. So even though they were higher and led to an increase in CPI month over month, is it really that big of a deal now that we are still somewhat in neutral territory in terms of not deflationary, not inflationary? Not that big of a deal, right? Take a look at apparel. Apparel is subject of, many increases because of tariffs since the April lows in which apparel was deflationary, minus 0.7 month over month. We're now sitting at 0.2%. Not too bad, as you can see, well in line with historical standards and well off the highs of 2022, of course. And now for good old shelter. So did shelter actually go up? No, it's just that it's the highest component remaining from the CPI print. You can see here that shelter is still on a steady decline and has been for the last 2 years, right now at 3.6% on a year-over-year basis. Not too bad there, moving in the right direction. We can look more at food. So this is just food not at home. This is just food in general, 3.2, an uptick, but in relation to historical standards, not so far off the mark overall. And then, of course, you had the headline on gasoline coming up higher, leading to an increase, right? But where are we coming from? We're coming from big negative to less negative, still in deflationary territory when measuring with a year-over-year comparison. So as you guys can see, right, not too bad. And lastly, if we do services minus energy services, services essentially have been flat for the last 3 months. So they are still, moving in the right direction, which is not up. And even if they were moving up, I probably wouldn't be substantially. Services and shelter, right? A lot of these services, this service chart also has the shelter services baked into it. So those two graphs are kind of showing common themes. The fact that housing is coming down, but not fast enough for people's likings. If you guys don't believe the CPI, well, you may as well just look at the Trueflation numbers as well. These were updated yesterday, but if you want me to update them today, you'll just refresh the page and we will see that for September the 12th, inflation measured by Trueflation on a 1-year comparison, same thing as the CPI, is currently 2%. And I give a lot more credence to this report right here because it does measure 15 million different products by SKU on a daily basis with 30 million different data points. So that being said, it measures a wider range than the CPI ever does, and I do believe it to be a bit more accurate because the data is reflected on a daily basis. So that being said, this is still at 2%, which is why I was saying even if CPI today came in hotter than last month, I don't deem it to be a problem. The Fed as well doesn't deem it to be a problem. The question is it going to be runaway inflation or a one-time effect? And the consensus right now is still for the one-time effect. And keep in mind, real wages are still increasing at a 3.7% clip year over year. And as long as the real wage increase outpaces the rate of inflation, consumers are still slowly regaining purchasing power. And that's kind of the biggest takeaway here from the story today. So as a result, because these numbers were not crazy in terms of the inflation data points, well, the markets were able to discount that right away, down to some one-time effects of tariffs. The rate cuts are probably coming anyways, and as a result, the markets moved higher. So hopefully you guys enjoyed that CPI segment. Now that we're through that, let's dive into some charts right away, shall we? So taking a look at the SPY, we're going to cover these briefly because we know nothing has changed. I'll try to get to the end of the video as much as possible to cover some stocks that we don't cover too often, but I'll be giving you guys some ideas as I move through these indexes as well. So moving on to the SPY, guys, clear daily uptrend, brand new all-time high. You guys know the drill. Who's in control? The bulls, obviously. Any move lower, looking for a new daily higher low. The first touch point will probably be this line right here, which is in line with the 12 EMA. If I could draw straight lines to begin with, talking about roughly 649, looking very good. The bulls creating a lot of space above your daily higher lows. So any pullbacks could probably be well received. The key focus is going to be on the summary of economic projections next week and Jerome Powell's tone when he delivers the speech. Is it going to be a dovish rate cut, otherwise known as the accommodative rate cut? Is it going to be a hawkish rate cut in which they cut rates, but the tone that they give and the description of why they're doing it, well, kind of gives people a bit of pause in terms of not having positive comments to say about the economy or the jobs market or uttering some notions of worry, right? You got to keep that in mind as well. That's the difference between a dovish rate cut and a hawkish rate cut, an accommodative one or a reactive one, right? So we'll see. But right now, as we stand, the bulls are still in full control. I would not be getting nervous at all unless we come back below and around 634, which is your support and your weekly 12 EMA as well. The bulls retain full control, guys. There's no other way to put it, right? Moving on to the QQQs right now. Brand new all-time high for the Qs. Daily bulls still in full control. Any move lower, looking for a new daily higher low for possible further trend continuation. On the weekly charts, also looking quite solid here. The weekly higher lows are all the way down here into support around the roughly 561 range. So until we move down below there, we shouldn't really be getting too nervous. The bulls control most of all the time frames, as a matter of fact, and even on the monthly, right, guys? September has started off in a very nice fashion. We know, however, that there can be a bit of pause and retracement into the the end of the month of September, and even the early stages of the month of October can be somewhat bumpy. If you guys are looking for this decline, well, there is only one thing that's going to cause it, and that is exactly what the Fed is going to say next week, right? That is the one and only factor which could come in and give this chart, you know, some probabilistic outcome of happening, right? It's going to be the Fed meeting, so please keep that in mind. If you guys want to know what I'm doing in terms of the Fed meeting next week, I'm not going to be trading too heavily into it, of course. I've already closed most of my short-term swing trade positions. And in terms of the wheel, I'll probably be playing the wheel a little bit light into next week, waiting for the speech, waiting for the summary of economic projections. It's the last big volatility catalyst that we have this month for all intents and purposes. And additionally, it's going to give us some clarity on what to expect maybe for the next 4, 5, 6 weeks out of the markets as they adjust to any commentary and any projections that the Fed might make. So I'll be taking it slow into next week, right? Getting a sense of what's going to work in terms of positions, what's not going to work, maybe moving forward into Q3, and we'll kind of adjust accordingly from there. But I'm keeping all of my longer term trades, talking about the leap call contracts, the long-term portfolio, all of that obviously stays as usual. Moving on to the XLF financials right now. Financials, fantastic day, 1.64% to the upside, looking very strong right here. Hey, I mean, they lost daily uptrend. They had a very nice daily uptrend right here. They lost the higher low sequence, and now trying to get it back in one big engulfing move. So it's looking good on the daily, but even on the weekly, guys, we'd been saying, right, well, what is going to happen if they start consolidating on the daily like that? You're just looking for a weekly higher low for possible further weekly trend continuation. Looking very strong on the ETF, but a lot of the names that we are pointing out not only yesterday, but in the past few weeks, they've really been breaching higher and higher and higher right now. We commented on JP Morgan possibly being a very interesting trade, coming down very close to our support area and looking for the possible breakout. This, for all intents and purposes, is somewhat of a very nice bull flag on the weekly, nice accumulation range, final backtest, and looking for the breakout. Beautiful breakout on JP Morgan. FICO, a name we haven't talked about in a while, but I had been saying down here was a decent bid. Also performing very well, coming back into the area that we lost a couple months ago, right? 16 up to about 17.5. So any buys on FICO down here are currently being rewarded, and I don't see any reason to sell these quite yet. Moving on to other names in financials that we don't talk about too often, Moody's Corporation. Now, I didn't bring this one up. I brought this one up for the Discord members, and a lot of people are making a decent amount of money playing the wheel under this location right there. Solid, solid, solid move by Moody's Corporation, looking very good for the possible rally. I brought this one up a few weeks ago when we were talking about the best narratives to be exposed to during rate cuts. Moody's, because of the sheer amount of a debt credit ratings that have to be given to debt coming up in terms of refinancing, right? In 2026, 27, 28, etc. There's a huge pipeline of corporations and other entities that need to essentially get new credit ratings on their debt for possible new debt refinancing. Who does that best? Well, Moody's and also SPGI. So SPGI now also coming alive. We were paying attention to this beautiful backtest, which happened almost picture perfect. Beautiful backtest of prior highs, and now looking to move. Not too late in my opinion, but another one that doesn't do credit rating agencies, but is part of the whole index game, MSCI. We covered their earnings. MSCI has been lagging behind. I think this one is next up, guys, right? This one looking very solid company. Nothing bad to say. Companies like Equifax as well. With FICO, we were saying that down here was not a bad area to be playing Equifax. Finally being rewarded. We had some nice short puts in the Discord, long dated ones for a lot of money, and we're up very nicely on those. And even a company like Visa, right? Visa's just been super solid every single time over the last 6 months that it comes down into here, 340 to 330. I'm always accumulating some shares. I'm always pricing out some leaps, and I'm definitely always playing the wheel strategy with my big account. So Visa, another one. So there's many different aspects to financials overall. Those are just a few that jump out to me in a notable fashion. Moving on to healthcare right now. Healthcare starting to break out. Finally, beautiful, beautiful, beautiful engulfing move by the bulls right here. Daily downtrend, engulfing move. Reset, right? Tightening range here above the highs, above your 137 area. That was very tough to break for several months in the past, as you can see. Sorry for not being able to draw straight lines with the touchpad. And now you're finally getting the breakout, right? It was very clear and obvious what was happening, especially if you looked at the weekly time frame. Beautiful engulfing move, bull flag back test, and now going for the ramp and rally, looking very solid. Next stop for healthcare, 145 up to 148. Hopefully you guys are able to get a piece of this for the 1,000 times that I was talking about it down there. or the couple times we've been talking about again down here for the second leg, preparing for the second leg, right? Now it's finally happening, so good stuff there. Congratulations to everybody who's in healthcare with us. Moving on to semiconductors right now. Nice day on semiconductors, guys, pushing higher and higher and higher, but not today from the likes of NVIDIA or Broadcom or AMD, really from everything else. Some of the equipment manufacturers, some of these smaller plays, well, they're not smaller in terms of market cap, but just smaller in terms of weight, in terms of the index versus some of the big players, right? Decent day across the board. Maybe not for the biggest names and the most popular names, but for the index as a whole, broadening out a little bit. Beautiful move here. Daily uptrend is clear as day, looking for a new higher low off of any back test. I won't try to draw this line. I'll just kind of do it on the chart. We've now broken above a clear area that was challenging, right, for the bulls for a while. So now if you backtest, that's probably exactly where you're going to come down to. 295 on the SMH would be the mark to kind of get the backtest and run from there. Looking not too bad. And even if we give back this entire move and come back to these lows, this was a huge area of support ever since the late stages of the month of June into July. 283 down to 277. Big fan of playing both of these levels on some pullbacks potentially for some further gains, and even an ETF like SOFI, right? Also doing the same thing. They're trying to break above the most recent tiny little range of a resistance high right here, trying to break above it, possibly going for the daily uptrend continuation into possibly weekly uptrend expansion, as we had been noticing that this entire range right here was just sideways accumulation in the grand scheme of a beautiful monthly move higher and consolidation where, well, above our big area of support. So I was commenting that was probably the time when Micron and things like that were coming back down to their 110 levels. Very solid re-entries, very solid entries for companies like ASML as well, coming down here, backtesting. Very solid entries as well for companies like LRCX, backtesting. Very solid entries for companies like TSM, sideways accumulation. Still very solid entries for companies like AMD and things like that. So there is opportunities all across the board. Hopefully you guys are able to get something in semiconductors. Moving on to the Russell right now. The Russell up 1.85%. Of course, when it's coming to the rate cuts, guys, the Russell is probably the place to be. We've been talking about that a lot for a long time, and a big portion of that, guys, is going to be KRE. KRE, the small and medium regional banks, it's about 17% of small caps of the Russell in terms of sector weightings. This one has not rallied tremendously so far, but I would not be surprised if it does play some catch up. Today, though, the Russell doing really, really, really well, and we have the same thesis on it, right? The Russell, you may not get the pullback, guys. We were commenting here that it's not a bad area to be accumulating the Russell in the event that you want to play this catch-up trade with the markets. We are now just coming back to our 2021 all-time highs. But keep in mind, guys, this sector has not done absolutely anything in the last like 3 years or whatnot. It really hasn't, right? We just have no new all-time highs almost since 2021. So the Russell will have a lot of catching up to do. The way that I would play this, if I'm still not in and I want to get in, I would have to be buying some here, but then I would also plan to possibly DCA, maybe like a 50% starter position here, and then adding a bit more. But keep in mind, this trade needs to be held throughout the entirety of the thesis. And what does that mean? It means that you're going for the expansion of the bull market, which will eventually hit the small cap growth area. And usually that lasts about 12 to 18 months when it starts. So keep that in mind. That's your timeline for this trade. So I do not believe that people are too late at all. Since it's the last day of the week, we will cover some of the other minor sectors. XLP, I think it's a fantastic area to be maybe building some swing trades, 80.5, 79.5. This has been an area since April that they have not lost. Just very, 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 very solid sideways range-bound accumulation. Eventually, it probably will pop and join the rest of the market. Moving on to utilities. Utilities was a beautiful picture-perfect breakout retest, guys. Picture-perfect breakout retest. We were talking about this just last week, right? Looking for the breakout, the retest, and run. And I was telling you guys, pay attention to some of your favorite electric utilities plays, especially the ones that are exposed to data centers, because they probably are following the same pattern. So maybe you guys are able to clip some of those or possibly clip the whole ETF. Very solid monthly breakout retest and possibly run on utilities, looking strong. And lastly, moving into a couple more real estate, guys. Pay attention. If you guys don't know what real estate company to choose, I don't blame you. There's a lot of them. There's REITs. There's other ways to play real estate as well. Maybe you're just a fan of playing the entire ETF overall, and I would not blame you for that either. Coming off a very nice support, 41.5 down to about 39. Looking good, guys. for possible, the possible start of an expansion phase for the real estate industry overall, right? It's going to be slow. It's not going to be as fast as Palantir, but with rate cuts, right? And we know that the housing market's been somewhat dead, and REITs as well, in terms of the activity, has been somewhat dead. Sorry, I typed in actual REIT, right? Realty Income Corporation, very solid company. Vici, very solid company as well. Hasn't really done much in the last 3 years. So we might just be looking forward to some of the legs of expansion that might be coming. Those are just a few of the other sectors that I felt that were notable to kind of bring up. The VIX today, well, even though CPI was higher, the VIX is lower. So the VIX just not doing too much of anything right now, right? We know that when the VIX is at these lows, when it's all the way down here, it's time to look for some names that have been left behind that have somewhat low volatility as well for some possible longer duration call options, not weeklies like leaps and stuff like that. And we know that when the VIX pops, it's time to possibly sell some options. Well, as of right now, we should be shopping for some longer dated options, and or whenever you have some temporary spikes in volatility coupled with some big red days, that's when you want to be selling some short puts, right? But as of right now, the VIX still low, still doing a whole lot of nothing. Moving on to the 10-year yields as well. 10-year finally cracking below. We've been commenting on this, guys, for months and months and months. It's finally here. Weekly, beautiful downtrend on the 10-year yield right there. Fantastic rollover, and on the 20-year yields as well. Fantastic rollover and break below 4.7. It's going to be tough for the bond vigilantes to keep this up, because now you're going to get people flooding into bonds to kind of capture the last amount of interest rate value that they can before the start to a sure thing rate cut cycle right now. So a lot of people are going to lock in these bonds for their interest rates, for the remainder of time that they can before next week. As a result, you're seeing the 20-year bonds really start to pop right now. A lot of demand for these guys right now, coming up into a first resistance target of 90 to about 93. Congratulations if you guys are able to buy all the way down here. You might remember that last week, Thursday, I did buy one more TLT leap, and now we're kind of riding. This is the first area of resistance. The actual take profit zone for me will be about 97 to about $100. It's not going to happen overnight, but maybe over the next few months as we move through the rate cutting cycle overall. That's it for your market rundown. Now let's do commodities and crypto. Then we're going to move into tech. So gold right now, very solid move by gold, but very tough to chase this one up here, guys. It's looking very strong. It looks like it actually wants a little bit more. Sideways consolidation for a bit more. Incredibly difficult to position on gold up here. It's a 78 on the RSI. The weekly time frame is curling higher, so you wouldn't be surprised if it goes a bit more. But the entry right now is very, very, very late, right? Very late. Like, where do you put the stop loss? I mean, you could make an argument that you would put the stop loss right below here, but that's, it's not the best. It's still a very extended level, right? But congratulations to everybody holding gold. Myself personally, I'll be waiting for this move to kind of top out and set some more weekly higher lows, similar to how gold does this sometimes, right? Be looking for some weekly higher lows, maybe pulls back into the 12 EMA at some point, and then I might be doing it. But beautiful uptrend rally on gold right now. Congratulations to everybody. Just very tough to position if you're not day trading or stuff like that for like some extended positions like I usually show you guys on the channel. That's it for gold. Moving on to Bitcoin right now. Bitcoin, solid day of action yesterday, 1.37% to the upside. Daily uptrend continues at this point in time, looking very good, back above your daily EMAs, which we had lost about a month and a half ago at this point. Very solid move there, and we knew that we were looking for one thing and one thing only. Down, weekly downtrend, and now we were looking for the daily uptrend to say that the weekly lows were set. Well, now your weekly lows are pretty much set, and now it's up to the bulls to once again recapture the weekly time frames because they lost those as well. Overhead resistance target still stays put at the same 117 up to 120, but not looking too bad at all, guys. Not looking too bad at all, right? Any fallback, the bulls are looking to continue this, and the fallback area is probably around 112. So if you're asking me, on any red days, am I still going to be looking to sell puts down here around the support range? Absolutely. Every single week. I had been accumulating some positions down here, and there is one name associated with Bitcoin that has not been doing a whole lot of anything, and that is MSTR. MSTR is now lagging behind in a quite considerable fashion, so I am still accumulating some positions on MSTR. Think of MSTR like an elastic band, right? However Bitcoin moves, right? Let's say this is Bitcoin. I know it's not. Bitcoin is more volatile than that. But MSTR, sometimes it'll overshoot to the downside and then overshoot to the upside. Overshoot to the downside, overshoot to the upside, right? Right now, what it's doing is it's overshooting to the downside. Usually when it plays catch up, it usually plays catch up quite quickly. So if we're looking for something that's lagging behind Bitcoin, that's still exposed to Bitcoin, MSTR would be my first choice. But Bitcoin right now looking quite good. It's just now up to the bulls to kind of reverse this into a new weekly uptrend overall. But the monthly was the clearest time frame of them all. I was saying any pullbacks in here, guys, pay attention. Looking for monthly higher lows for further trend continuation, and it seems as though that's exactly what they want to do right now. And even if we pull back and give this entire move back to the end of September into October, the thesis is still the same. It is still a buying opportunity down in that green box. Moving into Ethereum right now. Ethereum starting to break above, right? We were questioning whether or not they had it in them to break higher, or whether it was going to be a break lower, right? Well, as of right now, it seems as though they're breaking higher. They're consolidating in the middle of nowhere, essentially. There's no level here, guys. I mean, I guess if you go all the way back here, but even then, there's like nothing there, you know what I mean? The biggest level of them all is like 4,000 down to 3,700, but they didn't give us that. They're just kind of teasing us. It was a great location to be selling some puts under some things on Ethereum. Ethereum has always been a beautiful weekly uptrend. No secret there, right? But we were kind of looking for a bit of a back test down here, 4,000 to 3,700 for some more clear price action. Now, those of you that use the fibs, you might say, well, yeah, well, that was very clearly maybe a 0.5 fib, and maybe it was, but for all intents and purposes, it actually wasn't. So it gives more, gives more weight to the fact that this level is literally in the middle of nowhere, that they're stopping the bulls right there. My favorite one that I was playing during this entire decline here was BMNR. So BMNR coming off of its lows, I still don't think it's too late. Tom Lee wants to acquire 5% of the entire supply of Ethereum, and 5% of the entire supply of Ethereum is definitely not $8 billion in market cap, right? So keep that in mind. I'm going for BMNR, but I always get a lot of questions. Can I play SBET? Can I play ETH-M? Can I play any one of these treasuries? Sure, it's up to you. But the reason I play BMNR is because it has the most institutional support. It has the most super investors in it, and you have Tom Lee going on a CNBC literally every single week or so. He's going to pump his bags, right? So which one do you want more? Something like Michael Saylor, where he's always constantly pumping his bags and always constantly getting the biggest and the best institutions to invest in MSTR? Or do you want the other smaller ones that nobody really knows about except for you type of thing? Well, not only you, but you know what I mean, right? I'll always go with the biggest ones, guys, because they're not doing anything fancy. There's only one way to form a treasury, right? And it just follows the price of ETH. So at a certain point, it comes down to, why do I choose BMNR? Well, because Tom Lee has the best capacity to raise the most amount of money. That's really it. It really boils down to that and only that, in my opinion. That's everything for your crypto names. Now that we're through that, let's jump into some of the big tech names, shall we? All right, so taking a look at Apple real quick. Let me just move my camera. Moving on to Apple real quick, 1.43% to the upside. Not a bad day at all on Apple overall. We know that they kind of lost the daily uptrend right here by flushing these lows, but we are barely holding on to the last line of defense of support. You can tell by these weekly low candles, the bulls don't want to lose this if they don't have to, right? Talking about 236 down to 225. Not a bad day of price action on Apple. We obviously know that yesterday the stock was kind of plagued with a negative reaction to the iPhone 17 release, the new AirPods, etc., etc. People claiming lack of innovation, etc., right? So that being said, Apple bulls trying desperately to hold on, and I'll remind you, in the event we do come down below here, I'm a big fan of selling some put options down here in the lower 220 range, which is the next area of support, and a very big one as well for the monthly. Your monthly 12 EMA is down there. I did, as a matter of fact, do that yesterday on Apple. I'll show you guys that position at the end of the video. Looking not too bad overall for Apple, though. The favorite way for me to play it right now is, however, short puts. But if we come back down here, if I see the price there, well, probably I'll be buying, maybe some further swing trades. You guys know that I had some lead call options from the bottoms, and we sold almost the local top for now. Looking pretty good. Moving on to AMD right now. AMD down 2.43%. So AMD, I mean, it's still just kind of stuck here in this daily downtrend. It's fine. We're getting rejected right now from above resistance. 170 down to about 156. Next stop below is 147 down to 133. And if it comes back down there again, I will be once again selling short puts on this stock. It's just very healthy weekly consolidation, in my opinion. Nice weekly uptrend, looking for a weekly higher low. But at the same time, we are also looking for a monthly higher low, which is the biggest time frame of them all. Beautiful engulfing move. What is this, guys? It's a cup and handle. It's pretty much a monthly cup and handle. And you guys know when that gets started, usually the direction is quite clear thereafter, looking very strong. And I'm surprised nobody talks more about this. The fact that AMD is just so darn cheap right now, you know what I mean? Like at 150, it's a 1.3 peg and it's trading under a 40 price to earnings on a forward basis. You might think that's high, but look how much they're growing EPS at a very, very strong clip. The thesis for AMD is very clear. As a result, I will still be averaging into some shares down here and possibly even maybe adding to my leap position and possibly as well doing some, well, not possibly, but probably doing the wheels on them as well. Moving on to the Amazon right now. Amazon down about 0.16. No movement on Amazon overall. Still in the context of this very beautiful daily uptrend, looking for a higher low. Anything right now above 221, looking for that higher low. And in terms of the weekly right now, guys, I mean, the weekly is kind of very choppy, but, you know, you can kind of tell what the bulls are trying to do. They're trying to just build this structured weekly uptrend to the upside. Very choppy, I will admit, but still the pattern is quite clear, especially when you go out to the monthly time frame. Just looking for the monthly higher lows, which they got last month, for some possible expansion, right? That being said, the way that I'm playing Amazon, quite simply, if we come back down here, I'll be buying a couple more shares. If I can find some short puts in the low 220s, I will be doing that as well. And Amazon is still a good candidate for some leaps, but the leaps have to be deep 2027, guys. Amazon just has not rallied that much over the past 5 years, possibly because they came so high in 2021, but we're not even barely above the highs that we set earlier this year in January and February too, right? So keep that in mind. Amazon still, I mean, you could argue that you're late if you're using an anchor such as back here or back here. But are you really late in terms of the fundamental expansion of the company? I don't think so at all. I still do think it's a good candidate for some leaps if I had to do them on Amazon as well. Moving on to Google right now. Google up another 0.51%. I assume the bulls might be getting a bit tired soon, but they're not showing any signs of wanting to consolidate just yet. 84 right now on the daily RSI. You guys know the drill. Who's in control? Obviously the bulls, right? Any move lower looking for a new higher low. You might come down and tag the 12 EMA 228 on the weekly time frame. If they close the week like this, another very solid week in the books for Google. We are weekly overbought right now at about 78 on the RSI, so keep that in mind. I don't know where the top is going to be. All I can say is the next short-term price target is going to be 250 psychological. We will see. If you want to know when Google's stopping, rather than trying to short it all the time, could you guys please just wait for a loss of the 4-hour uptrend and a loss of the 4-hour 12 EMA? You'll probably get a better indication of when it's ready to pull back. And overall, is the stock still fairly valued? I do believe so right now at about 240 right now. You're currently trading at about probably like a 25 forward price to earnings at about a 1.7 peg. Not bad, not as cheap as it used to be, but still fairly attractive, guys. Still one of the cheaper names out there in all of tech. I know. Even if you contemplate hitting the buy button here, it's just not going to feel good, right? But if you have a long-term time horizon, 5-10 years, the valuation right now does support a good compound annual growth rate, even for buys made up here. Moving on to Meta right now. Meta down about 0.14%. Meta just cannot get the consistency, right? Seems as though Meta, since June, it's had like a consistency problem, right? Nice pop on earnings, but lack of follow through. It just hasn't been able to kind of just pile on the gains like Meta sometimes does. There's always seems to be something with Meta, right? That being said, very solid company, right? Daily downtrend, engulfing move by the bulls, looking for a new higher low and reset the daily uptrend. The line in the sand still remains around 732. You wouldn't like to see them lose that, right? Because that's kind of like your previous support, resistance back here as well was support for a while. I mean, the true line in the sand is this guy, right? But let's just say 735 has a couple more touches. So we're going to be looking for the new daily uptrend shift for the bulls. They got to maintain that, because if not, we're just heading for another leg of weekly consolidation. If you break 721 and the next one, right, it's kind of a weekly downtrend, which would be unfortunate for Meta, but would probably bring us down here into the low 700s to high 600 range, at which point I would be accumulating a couple more shares. Right now at 760, the valuation is not too bad at all, under a 30 forward price to earnings, and about a 2.27 peg. So it is a bit on the expensive side, but not too expensive that I definitely wouldn't buy, right? I would be nibbling some shares here with my paychecks. Moving on to Microsoft right now. Microsoft up 0.13. The bull's still not doing anything. Daily downturn. We talk about this every single day on the channel, right? If you want to know when the drop is done, you got to let the bulls show you, right? And the only way they can do that is by giving us a nice bounce, resetting the daily uptrend, and only then will we know the weekly consolidation is finished. As of right now, it's just not finished. We're reacting nicely around the 12 EMA, but lack of support being set during this entire rally, well, that's why the bears are able to kind of move through these levels to the downside. If you ask me where I'd be interested in Microsoft, well, possibly down here, maybe like 470, 465 if we get there. I'm not saying it will get there. I'm just saying that's where I would be interested for some swing trades, or possibly adding a couple more shares, as Microsoft right now is towards the top end of its valuation in or around 500, but solid company. I'm not selling any shares. I'm just not buying any more, right? Moving on to Netflix right now, down about 3.54%. So we've been talking about the fact that for the past few weeks, the bulls have been very adamant on defending this 1210 down to about 1185 region. Well, let's just see how well they can actually play defense, because now we are challenging it again for the 5 millionth time. Again, challenging this level, right? So we'll see who wins, but as of right now, you would not like to lose this. If you lose this, right, what we were going for here was a beautiful leg of weekly expansion. If you lose this, sadly, that is kind of done, right? So 1185. Line in the sand. If you lose that, you're coming right back down here, 1157 to 1100, at which point I'd be very interested in buying some Netflix down here, guys. If we can move further here into the $1,100 to $1,000 range, I'd be a big fan of buying Netflix. I've been saying that for a while, and that is still the area where I would not mind playing this company in terms of acquiring some more long-term shares. Moving on to NVIDIA right now. NVIDIA down 0.9, or rather 0.09%. Not too bad at all. I'm glad that I left this little graph on the chart real quick. I don't know why my laptop keeps moving, man. My bad. All right, now it's going to be more stable. Let me just check, see if everything's good. I'm not frozen. No, I'm not frozen, so I guess we must be good. So NVIDIA, I mean, daily downtrend, as I was kind of showing with the pattern yesterday on the chart, daily downtrend, but when we have a nice engulfing move, well, not engulfing, but, you know, a 5% retracement size, which is good. And as I drew here, whenever this little bounce ends up, you're going to be looking for a new higher low and possibly go for the daily uptrend shift, right? That being said, if we pull down into here, fantastic location to be selling some puts under the market, maybe even building some swing trades, which is why I say swing trade longs, 170 area. Stop loss goes below here, 164. And you're looking for expansion into the highs and then beyond as well, right? Not too bad of a swing trade setup. Pay attention to it on NVIDIA. If we're looking for the valuation of the company, valuation at 175 is not bad, guys, honestly. It's a 1.71 peg, which is really fair, in my opinion. Forward price to earnings, 39.3 for 2025. For 2026, it's like a mid-25s, but you really don't need to know that because all of that's encompassed in the PEG ratio. At 1.71 is just not that expensive for NVIDIA, in my opinion. Moving on to Tesla right now. Tesla, doing exactly what we were looking out for the past few weeks, right? This is one of the two scenarios that we were looking for. We were either looking for possible swing trades back down here on a big flush. Didn't happen. We understood that the bulls were in full control right here. Higher highs, higher lows, and now higher highs and the break of the infamous area of resistance that has been plaguing the bulls since the late stages of the month of April into May, all the way back here, right? Now we got a nice clean break. So now next stop for the bulls is going to be 385 up to 400. Give me a breakout, reject from here, and then back test this location. I might get interested for some swing trades on Tesla, quite simply because then we can put some stop losses, right? Same thing like NVIDIA. We can set some stop losses below the lows and then go for the expansion, right? Rather than just buying here into resistance. You don't know if they're going to fully complete this pattern yet or whether they pull back right away. Either or would be fairly decent for a possible swing trade long, with a stop above the support area. Looking good. Weekly expansion also looking good. That was never in jeopardy. The bulls had been maintaining this. It was a bit awkward, but they never lost it. And now looking good for the weekly uptrend breakout. Very solid for Tesla. Moving on to Palantir right now. Palantir 1.43% to the downside. Palantir also just doing a good old breakout retest. This sideways consolidation into a new daily uptrend. Now looking for the back test, right? We were talking about this yesterday. Back test of like 162. Not too bad. The swing trade would have to be really wide on Palantir, guys, right? You would kind of have to be below these lows, below like 150. So the entry indeed would be now or soon, looking for the higher low, looking for the continuation. So the entry would be close to now. The stop loss would be 150, but then you got to put your take profit probably 190 to 200 for the risk reward to make sense. Not too bad of a setup on Palantir though, looking quite good in terms of the weekly as well. Higher lows on the weekly, looks as though they are set right now into the 12. The bulls might just be looking for another leg higher, especially if the market cooperates. Not too bad. I'm not in any swing trades on Palantir. I also don't have any leaps or things like that, but I still do have a couple hundred shares in this company that I acquired a very long time ago. And you guys know I've been selling some Palantir this entire way up, and I've been very happy doing so in the process. Palantir has made me a tremendous amount of money, but the few hundreds of remaining shares that I have, I'm just keeping at this point, probably for the next 5-10 years type of thing. Moving on to SOFI right now. SOFI tried once again to break above 26, couldn't get it done. That's fine though, although it's being very choppy around the 26 area. It's fairly clear what's happening here on the weekly time frame. So any move lower, guys, we're just going to probably backtest this location again, 24.30 down to about 22.18. Looking like a fairly clean setup. It is a nice weekly uptrend. You got the higher lows. In the event that you kind of reject here again and come back down here, I wouldn't be too nervous. This whole support area will be a fantastic area to maybe be building some further longs in, but also selling some put options under that location. As at the end of the day, you'd just be looking for some monthly consolidation. And what better area to do it in than the same area that was challenging for the bulls not once, not twice, but 4 times in all of 2021. This area is going to be a tough area for the bears to break through, in my opinion. And SoFi right now trading at a very fair valuation, about a 9 forward price to sales. I think this company over the next 12, 18 months can easily probably be a $40-45 billion company. I would not be surprised if they keep executing and the markets remain favorable for financials too with the rate cuts, right? Moving on to Uber right now. Uber up 0.5%. Not too bad of a move today on Uber, looking quite attractive as a matter of fact. However, not able to close at the highs, right? So very choppy price action for Uber. Support stays put 93, down about $90, this whole $3 range. I mean, the bulls are looking a little bit tired here at the tops, let's not lie, right? But a very massive move, big first leg, smaller second leg, even smaller third leg overall. We're getting a little bit tired here possibly at the tops, but Uber is not one that I'm looking to swing trade right now. I'm just holding my long-term shares. 89, I'll let you guys know, right? There were several opportunities throughout the initial legs that I was a big fan of playing Uber swing trades and also short puts. Right now with the price action tightening up, not so much. I mean, I assume that if you really wanted to force along, you'd have to do so with a stop loss below this guy. And then at that point, you'd be targeting $100 psychological break higher. The risk reward is not crazy good, but it is still there. 4.2% free cash flow yield in the high 90s and a 1.17 peg means this company is still fairly valued, which is why I am holding all of my shares as well. And now lastly, TSM, Taiwan Semiconductor, strong. Very strong. Maybe not today, but you guys can clearly see what's going on here, right? It looks just like SOXX. It looks like SMH. There's a very clear area here, guys, where we might be looking to backtest in the event we get any weakness leading into the rate cut day, et cetera, right? You guys know the drill. Beautiful daily uptrend breakout. And at any point you're looking for a higher low, you're going to be backtesting this location. Let's call it 247 down about 240, this whole 7-point range that we're struggling with in the past. And you also have your 12 and 26 EMAs right there looking very solid in terms of a setup. And this is just a beautiful weekly breakout after several weeks of consolidation in which we were saying, yeah, it's good for some short puts, it's good for some shares to be accumulating long. Now all of that stuff gets rewarded, looking very good, and in around 260 right now, 255, about 10% higher than it was here. You're looking at a forward multiple of about a 26 forward price to earnings and about a, let's call it 1.55, 1.6 peg. So TSM, by large and by far, is still one of the cheaper semiconductor names out there in the market with some of the best net margins and some of the best demand in the pipeline as well. So with that being said, guys, that's everything I had for you guys for the whole market rundown. Now, let's dive into your guys' favorite section, which is the biggest gainers and losers of the day, shall we? All right, so starting off with the downside here, Klarna down 7%. I might get interested, guys, when they add options to this one. Playing short puts on it it'd be like 35, 30 bucks or something like that. What it is doing though at the same time is it's dragging down one of its sector peers, Affirm. And Affirm I'm definitely starting to play right now. Lower 70s is kind of where I want Affirm. Now you can see there's this whole area right here, right, which we were kind of testing prior. Let's call it, just call it about 70 down to about 62 bucks, something like that. You can see it even more clearly on the monthly time frame, the top of all those monthly candles, the bottom of these, and it would just be a very nice back test location. They were literally just almost at $100. So if you get a nice discount on this, it's not going to take away anything that was said on their earnings. Their earnings were fantastic. We covered it on the channel. And yes, I do currently have an active trade open again now on Affirm. Short puts in the lower $70. I opened that earlier today into next week as well. You might remember we had some leaps here on Affirm that we started like, I don't know, around 50 bucks. We sold them when the stock almost got to 100. So we kind of bought very nice area and we almost sold the top. If it will be coming down there, I'll be doing a couple things. Not only will I be selling some put options, but also I might just be looking for a reload for some longer duration swing trades. Moving on to Oracle, I guess. Oracle, I mean, down 6%, completely normal, right? Ridiculous rally after earnings overall. It was revealed that their $300 billion of the remaining performance obligations is with OpenAI. However, the problem is OpenAI is a $500 billion company and they don't have $300 billion. I assume they can borrow some of it, but that's not going to be too good for their balance sheet. However, keep also in mind, guys, that in the past 2 years, Microsoft, Meta, Google, right, and Amazon combined have spent $300 billion on AI. And they are some of the most profitable companies on the planet. OpenAI is not. They're still kind of somewhat oscillating between profitability and not. So I'm confused as to how OpenAI is going to fund the $300 billion in contracts that it has somehow locked in with Oracle. And I think today when people were analyzing this, this is also what gave people a little bit of pause, right? So keep that in mind. Any pullbacks? I mean, you guys know the drill, right? Right now at 306, it's still a bit overvalued in my opinion. But if we somehow make our way, back into like 260, 250, and we erase all this move, maybe you might find me playing some swing trades, maybe not. It's not my favorite company to play right now with such an extended move though. I'm moving on to NBIS. NBIS for me is also a backtest location play, 75. I know a lot of you guys don't want to hear that it could come back there, and it doesn't need to come back down there. NBIS is still a good stock to accumulate some shares of on these declines. If you believe in the company for the next 2-3 years, I think at $20 billion market cap where it stands right now, there can still be some good appreciation. Talking about like a good 50%, maybe even like 2x in the next like 2 years, just because of the amount of contracts that they have and they will obtain, and the amount of capacity that they will build out, right? But as of right now, the easiest way to play this on big red days, guys, is just playing some short puts under the market where you would actually not mind buying 100 shares. And the closest level that we have is like 75 down about 70 bucks, that resistance zone, current support right now. Affirm, as we said, right, I'll be targeting this lower area. I'll show you guys that soon. CoreWeave also down. It wasn't the only one that was down. A lot of the data center plays that did fantastic yesterday, down a little bit more today, which is fine. CoreWeave, brand new daily uptrend. We're just going to be looking to backtest this area that we just broke out of. Call it roughly 110 down to 100. Still a big fan of accumulating CoreWeave as well, as I do think they are undervalued in relation to what they possibly can do in the next 2-3 years worth of time. You guys remember we did the base case and the bear case scenarios for CoreWeave based off of their price to sales numbers, and even a very bearish 5 price to sales by 2028 would put this stock at about $246 per share. So looking good, guys, and that's just the bear case. The base case would be a 10, and that's closer to like 500. So maybe somewhere in between the two if you want to be more realistic, and we haven't even done a bull case on them. But, you know, not to get ahead of ourselves, I'm just saying that this one right now is a pretty decent bet. Rubrik, this company is asked to me by a couple people, guys. This one's not too bad, honestly. 72 down about 65. This area for some short puts or accumulating some swing trade longs, not too bad as well. Similar to a lot of their sector peers, right? This is an unprofitable cybersecurity company, but they're growing revenues excessively quickly. Not as quickly as the street would have liked to see on their last earnings call, but still very fast. You guys know Wall Street's been picky. Look at this revenue growth. very, very solid. In the next few years, they'll be doing over $2 billion. Company currently trades around a $15 billion market cap, and they will be doing the infamous flip to EPS profitability over the next few years. You can see the analysts are also still quite bullish on this stock. I like this one. I wouldn't mind buying this one, like mid-70s, selling some put options or accumulating some shares here. Pretty good bet, in my opinion. That one, Sentinel 1 as well, looking good for a rally recovery back into the 21-22 range. This is one of my favorite ones, guys. Out of support, cheap valuation, buyout candidate in not semiconductors, in cybersecurity. Not a bad look, honestly. And we can talk about some of the other cybersecurity plays while we're here. CrowdStrike was a phenomenal look a few days ago. It still is decent in my humble opinion, but it is off the bottoms right now, reacting into the resistance range, 453 down to 434. Come back down to these lows, guys. Pay attention if you have a big account. Selling some put options down here under 400. Not the worst proposition on the planet. And then moving down into a few more, I guess. I mean, there's not really anything else to see, right? Other than IRN, maybe. IRN, be looking for a back test here, like 27, 28, 29. You can sell some puts down here. 25 or under is where I would be looking to sell some puts. It's still elevated, but I'm just looking to position, right? If I'm just looking to accumulate some positions, then the mid-20s where we did them after earnings is a fair valuation for this company, of course. Their services will be in demand, as will CoreWeave's, as will NBIS's over the near-term future. I think that's pretty much it across the red names, at least the ones that I want to cover. Moving on to the upside now, Open Door, this one's been the same. I mean, you don't need to ask me about Open Door. I've been saying it here. I've been saying it here. I've even been saying it here. Like, it's a lottery trade. Like, you guys can buy positions. Although now, I'm not going to say it's late, but it's kind of late now, guys. You know what I mean, right? Can it go up further, another 50%, 2x? Yeah, of course it can, right? But let's be honest. Are you late? You are late. So any positions started here, guys, I mean, you really, at this point, if I was saying that only invest what you want to lose back here, right? Maybe you guys put a bit more than you were willing to lose. Now you really literally need to put what you're willing to lose. Shares, because the options right now are going to be absolutely juiced. Good area to take profit though. If you have some positions from down here where we've been commenting on it a lot, very nice initial level to kind of take some profits. $10 psychological. Next area of resistance, logical area of resistance would be this guy right here, 14, 15, bottom end of this zone right there, right? And then of course it's the top about 23. So we'll see what happens, but very strong move. Moving on to Circle right now. Circle has been a buy. We've been talking about it down there. I've been accumulating some Circle positions this entire way down since their earnings. Entire way down every week or so. I nibble on some Circle, keep nibbling. And now, we have a nice day of breakout here, 17% to the upside. We'll see if the bulls have it in them. Take a look down here. Look at the MACD on the daily, guys. It's never been positive. Shifting positive finally. And we have not had a daily uptrend in how long? In so long, guys. It's been since like June and July, right? So we'll see if we can get it done this time. Engulfing move, maybe with a back test and run, looking pretty good. And even the bull and base case scenarios for this one, right, by 2027, good share appreciation possible. Very, very, very nice there. Tempest AI, this one, we haven't talked about it in a couple of weeks since we were saying it was a good long opportunity there based off of a weekly back test. Chart setup was clean, man. Very clear. Beautiful breakout, retest of an area, and run. We were also looking for some short puts down here. Now, I mean, you're kind of a little bit late, let's be honest, for any swing trade purposes, so please keep that in mind. Moving on further, I mean, Synopsys, they're just up about 12, 13% from their 30+% decline yesterday. Some people love this stock. I don't really cover this stock that much, so it's really up to you if you believe in this one for long-term fundamentals at this point. I personally think that there are better plays in the market right now. Moving into Figma right now. Figma, you guys know the drill, even though it's up 9% today. Doesn't really mean much. We've been in a perpetual daily downtrend this entire time. We were daily oversold, of course. That being said, we covered their earnings and we were saying, right, that by 2029, they could have a share price of between 145 to 150 type of thing on the bull case scenario. Bear case scenario, or rather not bear case, but just maybe a more neutral / bearish bias case if the multiples compress a little bit, if the revenue growth compresses a little bit, and the margins are not as bullish as people assume them to be, well, maybe you're only looking at a share price of possibly 90 to 100 for fair value. So not my favorite company out there to play, I'll be completely honest with you, but as I have said, if it does come down here again under 50, I will be playing short puts 40 to 45. Couple more maybe. Oklo, looking at Oklo, very solid breakout pattern here, right? Daily uptrend is looking good. It's very tough to enter this one though, unless you have like a 2-3 year time horizon, excuse me, because they don't make any money whatsoever. Kind of like SMR, right? So you're basically just counting on possible future contracts and them rolling out the technology in a timely fashion. I mean, hey, who knows, right? But very nice momentum there by Oklo, looking for further gains. Tough chart to trade because now the stop loss is going to have to be way too low, in my humble opinion, on the weekly, unless you want to play with a daily stop loss right there. But it's still, that's $13 to justify that. You'd have to be going for like $100 psychological, right, for that risk reward to make sense. So keep that in mind. Not a bad play. Like, I assume if you're holding from 20-30 bucks, it's okay to hold if you have a long-term thesis. Him starting to crack above trying to crack above resistance, 52 to 48. Not too bad, but you guys know the drill, right? Around 40 was okay to buy in terms of the long-term fundamental valuation. The chart is just absolutely all over the place, though. All over the place is Hims. I'm just holding some long-term shares. No swing trades for me. I think the chart is very unclear in terms of the price action. You're going for the daily uptrend break. I assume that you can maybe take a long here with a stop loss below the new daily higher lows, and then you'd be targeting like the break back above here, 67, 68. It's ambitious. You're taking it into resistance without that being broken, but that's the only thing that I could kind of piece together on this chart that would make somewhat of sense, right? And now moving on to a couple more. We'll just do a couple more because the video is getting a bit long, and I got to do the portfolio recap now. Duolingo 8% to the upside. I mean, I have a very tiny position on Duolingo, nothing to scream home about, of course, but reacting nicely, protecting the lows of support down here, like 270 up to like 300. This is the zone that, you know, the bulls kind of fell back into a few times so far. I know this one has been the subject of much not controversy, but much criticism because of the new AI language tools, of course, that are being seen on the open market right now. The new ChatGPT 5, Apple, of course, with their AirPods rollout just the other day that do live translation services. So keep that in mind. Obviously, there's the people who defend Duolingo saying that, well, you know, language learning services are not the same thing as language translation services. And this is true. The customer demographic is different. But let's be honest, Duolingo does trade at a somewhat rich multiple. So that being said, when there's a kink in the thesis, right, in the armor of the thesis, well, of course, it's going to sell off more than other names that don't have a high valuation. So please keep that in mind. I still don't mind buying some shares here and holding them, but do I have the highest expectations for Duolingo? No. Do I think there's money to be made here? Yes, meaning like highest expectations. Like, do I think it's going to be like Netflix or Spotify? No. But do I think that the stock can progressively make its way back into the 400s, 500 range over the next 12 to 18 months? Yeah, I personally do. Moving on to Baba right now. Baba, beautiful breakout. We commented on this tightening bull flag right there on the weekly time frame, kind of like Tesla, right? Looked exactly like Tesla. Big breakout by Baba right now. Beautiful monthly follow through as well, looking very strong. Next stop for Baba probably is going to be like 170s. These guys right there, looking solid for the follow through. I'm not in Baba personally. I'm in KWeb, which is just the ETF, right, of some of the most popular China names. And we have leap calls on this one, and we are doing quite well on it. Now, some of the names are currently left behind a little bit, such as Baidu, such as JD.com. So if you're not trying to chase Baidu, if you're not trying to chase Baba, there's only a couple reasons why you would take Baba, right? Number one is because you actually believe that it's the best China play. At that point, I mean, that's fine. If you're just trying to play Baba because you're just trying to play something exposed to China, well, you might be the time to play some of the names that are left behind, some of the lagging names, or just the ETF overall. Now, you are late in relation to where we were buying it, but you're somewhat early in the entire recovery story of the Chinese economy, let's be honest, right? And I think that's pretty much it here, guys. LRCX, not too much to talk about. Very tough to chase it all the way up here. The trade was really down there. Congratulations if you got it. You might be looking for a similar, you know, backtest trade of the highs for a re-entry, kind of like we were looking at on TSM. Micron, same thing. I mean, you're kind of late here, guys. Let's just be honest, right? You'd be looking at this point for a backtest of 130, perhaps. I don't know if it's going to give you that, but we did say, I mean, I did, in all fairness, if you guys have been watching this channel for months and you don't have Micron, I don't know what's going on right there. Maybe you just don't like the company, which is fine. There's no problem with that at all. But beautiful weekly uptrend. I mean, clean break right now. You're pretty much going for your previous highs established in the month of June. Next stop on Micron, of course, is going to be, never mind. That's the all-time. I thought there was like one more candle that I was missing, but no, that would be all-time high break. And at that point, psychological round numbers, 175, 200, looking good. Very strong on Micron. Equifax we already covered, Tesla we already covered. I think that's going to be a BMNR we already covered earlier. FICO we covered already earlier. MSCI I hinted at earlier as well. So I think that's it, guys. Yeah, I think I'll wrap it up there, guys. So that's everything I had for you guys for the biggest gainers and losers of the day rundown. Hopefully you enjoyed that section. I kind of just fly through them and give you guys my, my thoughts in real time and how I would see the charts just looking at them. And now, guys, lastly, okay, let me just present to you guys some of the, the portfolio, essentially, right? So what we're looking at here, that's not the right button. This is the right button. So in terms of the plays that we have on right now, I mean, I guess I'll take you guys through the wheel trades because I won't see you guys tomorrow. So Apple, we got it yesterday. 222 5 short puts for about $1.05. I did not get the low of the day at all, not even close, but still got roughly 0.5% for a week's worth of time. They're up 40%. Affirm is a trade that we took today, as a matter of fact, 72s. I replaced the Nike trade. I had a Nike trade that I did not show you guys. It was just basically the same thing from the top 5 options video, right? 72 short put for like 35 cents, 0.5% for the week. We closed it today for about 5-6 cents. It was like, 80% profitable, good stuff. We replaced it with Affirm today. We got this one for 35 cents. 72s, as I was saying, right? Currently still in profit a little bit after today's action. BMNR expires tomorrow, 38.5. We got it just last week, or rather early this week, I believe, for 22 cents. It's now almost worthless, so full win there. CoreWeave, as you guys know, we will be called away next week unless it somehow miraculously comes back down to $98. I will remind you, our cost basis on CoreWeave right now is $94.90, so I do not mind being called away. And I also don't mind being called away because I have one CoreWeave Leap Bull Call Debit Spread down here, which we are up right now about 20% on. So that is the thing that I'll be carrying into the future, not those shares for the wheel. Although in another portfolio, I do have a decent amount of other CoreWeave shares that I've been building around the lows. And I also have CWVX, the 2x leverage CoreWeave shares in that account too. Those alerts were also sent in the Discord for our members in around those lows. Additionally, guys, we have NBIS. 75 short puts right here, as you guys see, right after the decline yesterday, I believe, on NBS, or the day before, I'm not too sure. The day after, it went up 45%, right? On the first red day thereafter, we took the 75 short puts for next Friday for about 40 cents. That's 0.5%. They're currently up right now by about 30%, looking good there. Open Door, this was just a little funny little contract we did earlier this week. Next week, $4.50 short puts for 10 cents. They're worthless right now. Of course, it is what it is. Oscar Health, 16.5 short puts. Those are good until next week as well. We took those just the other day when Oscar was down 6%. Those are now 50% profitable, even more because this is not tracking properly. These are almost dead, right? We're probably up like 70% on these. And Sentinel One, we opened these earlier in the week as well for about 10 cents, 16.5. Sentinel One is now $18.50. So all these contracts are looking very good. CoreWeave is leaving the portfolio next week. All of them are looking very good and they're very solid. And that's not to mention all the trades that we closed this week for the wheel already, of which there have been many. I guess I'll have to give you guys that update when we do the top 5 options list on Sunday, when I do the weekly recap section in the Discord to show you guys all the trades that were closed this week. But it's been a good week. Now, in terms of the long side for the portfolio, long options, K-Web calls up 70%. Not adding, but I might trim one soon if it comes in at $42, $44 per share. Oscar Health, lead call contract up 50%. I even showed you guys that on the YouTube channel when we took it. Hopefully you guys are able to nibble on that. Sentinel One, $20 calls, 25% to the upside. Still a decent buy area, in my opinion. TLT, we just now turned positive. We bought the first one 7-8 months ago. The second one, we bought it last Thursday. So we DCA'd. We are now positive on TLT for the first time in a very long time. So I was waiting patiently to DCA, and I got it right before the day that it started to rally the most. XLV Healthcare as well. We're up about 29% on those call options. Still very bullish. holding at least both of them into 150. Maybe I trim one when XLV hits 150, and I keep the other one through 2026 or the end of this year as well. In terms of the other leap call options that we have down here, AMD, we're still down on this trade, but I did say that I was going to DCA it if it comes into the 140, 130 area. I'll be throwing another leap call contract at this one. The Amazons are up 42%. Those are very good. We bought these in the April dip lows. CoreWeave as well, new position, we just talked about it, 20% higher. Good risk to reward on that contract right there. The Fiservs are dead. This was an earnings trade. It's been dead since earnings, essentially, for like 2 months. I'm just like waiting for it to come out of the portfolio. Google, very strong move. We're up 112% there on Google. These were taken when the stock back tested 165 a few months ago. Looking good. I might think of winding this one down. Probably higher than 250, call it like maybe 270, 280. You've got a lot of time, man. June 2027 on these debit spreads. So I'm not in any rush to close them. Meta, just a short duration swing trade, down about 12%. We'll keep it for a bit more and see if Meta can actually continue the daily uptrend breakout that it's trying. Same thing for NVIDIA. This was a trade taken before earnings. It's now since been down after earnings, of course. We have until November. I'll just keep it. It's not that expensive a position, so I'll just keep it in the event that the stock does come back. We're trading kind of close to the earnings lows again now. And now Micron. Micron, we're up 210% on this contract. This account, I only have one. My other account, I had 10. I've wound down a couple more. I only have about 4 left of those 10 right now. Very solid trade. If you're asking me where I'm going to wind this Micron down, probably like 170, 180 in this account. If I can find that, even though they are for December 2027, we'll have pulled a lot of the premium forward, even though it is a debit spread. So we'll see what happens. We'll see at the time how the markets are and everything like that. But possible profit target could be coming up around 170, 180 on Micron, looking very good. So all in all, a lot of unrealized gains on our options, and you'll notice that we have a lot of time on our options remaining as well. And the wheel contracts, no big assignments at all, just CoreWeave, which will be coming away. So we have a ton of buying power, looking good into the second half of this year overall. And that is pretty much it for everything, guys. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new. Would love to have you back in these videos with us. And lastly, if you have any questions, please feel free to leave them down below. I'm always very happy to answer your guys' requests. And that being said, guys, lastly but not least, well, actually, it will be, well, not least, but it is last. If you guys wanted to participate in our trading and investing community with over 200 other members, where we trade the markets every day, build very solid long-term portfolios, there's a lot of knowledge that passes around in there, and we have a lot of fun in the process, you might consider joining our trading community. The link to the community to join is down below in the video description. In the community, you get access to all of our trades, every single one of our trades. So whether it's a wheel trade, a directional trade, a leap call contract, a debit spread, a credit spread, swing trades with shares, everything that we do, here's just all of the trades that we've made in the last few months. The green little check marks are wins, the red little circles are small little losses, because I usually keep the wins pretty big and the losses pretty small. So that being said, you get access to all of these trades in real time when I do them, no matter what the type of trade is. And you also get access to our private morning live streams Monday to Friday, where I trade the markets with you guys live for 2-3 hours at the open, trade live, but also answer all your questions on your stocks, your options, your long-term portfolios. It's a great place to interact with me one-on-one. All right, I can teach you guys things. I can go over certain contracts, why I like them, why I don't like them, obviously in a non-financial advice context, of course. And thereafter, guys, you also get access to our chat channels. You can ask me all of your questions throughout the day if you can't attend the live streams. And you also get access to our educational section, private video section, where I go over technical analysis, fundamental analysis, how to grow portfolios, how to create a solid long-term portfolio as well. Many different options trading strategies, tutorials, different variants of the wheel strategy, whole bunch of things that I don't really show much of on YouTube in that educational section there. And you also get access to all of my charts whenever you see support resistance boxes like this. And also you see the earnings breaks down like this on like hundreds of companies, guys. You just can copy paste all my watch lists and all my charts, make them yours. It takes like 5 to 10 seconds to do. just an added benefit for our Discord members. If any of that sounds good to you, hopefully I get to see a few more of you guys in our Discord. We'd love to have you guys in there. The link to join, as I said, is down below in the video description. And that's it for me today. Have a beautiful rest of your evening and have a great Friday session. I will see you guys on Sunday's top 5 option video. So take care, having a great start to your weekend. See you guys soon. Hope you guys had a great week in the markets. Hopefully you crushed it and that you've made some decent profits. Peace.